Look, I think China's had a massive double deflationary impact on the world. Um, in 2018, when the government told all of its banks no more loans to real estate, all the loan has to go to industry because we have to build our own domestic resiliency because the U.S. is out to get us. Um, the first deflationary impact of that was, of course, the real estate bust. And with the real estate bust, you unleashed a balance sheet recession. Most Chinese people have the very, very overwhelming amount of their savings is deployed in real estate. So when real estate went down, you did have a pretty strong negative wealth effect. Balance sheet recession that China is still dealing with today, by the way. So that was the first deflationary impact. But to your point, the second deflationary impact was that if you were competing with China, all of a sudden, if you were, I don't know, producing car parts or telecom switches or solar panels or whatever else, you were dealing with a competitor that essentially had a zero cost of capital. Um, and that was moved as a result was investing uh, in productivity enhancing machinery, processes, whatever else, and moving up the value chain extremely, extremely, extremely quickly. That's been the big story of China for the past 7, 8 years. While everybody was fixated on, oh my God, look at the Chinese real estate bust, the banks are going to go bust, it's going to be like 2008 all over again, etc. China was basically registering soaring productivity gains on industry, to the point where now China is the biggest car exporter in the world, produces the best trains, produces the best turbines, where China can produce nuclear power plants for half the cost of everybody else, so on and so forth. Now, this is where, to your point, I think we are starting to see a shift where policymakers are now saying essentially, look, the ability of the US to take us down is no longer there. We just saw it in April. In April, the US comes out swinging against everybody. The one country that stands up against the US is China. So in 2018, when the US came swinging for China, China felt we're not ready. So they took the punch. Same story in 2021 when the U.S. came swinging for China again. China took the punch. And in 25, when the U.S. comes to punch again, China says, "Okay, gloves off, let's go. You wanna knuckle down? Let's knuckle down. Um, you put you put restrictions on semiconductors. We'll put restrictions on rare earths and on magnets. Pretty soon, you won't be able to produce missiles. You won't be able. Your GM car plants will shut down." And so the U.S. is forced to back off. So now, if you're China, you're like, okay, the U.S. isn't going to mess with us anymore. This isn't the big concern. We have lots of other big concerns, but since then, essentially since this spring, the new buzzword in China has become anti-involution. So every Politburo member runs around giving speech about the need to do anti-involution, and anti-involution essentially means anti-excess competition. So this is a new buzzword, um, and it's a very strong signal to the banks, telling the banks, guys, stop adding excess capacity on top of excess capacity. So it doesn't mean that the excess capacity that is already here will be immediately taken offline. What it does mean is that probably we're done with the cycle of adding capacity onto capacity, which incidentally is one of the reasons why Chinese growth lately has been disappointing. And it's fascinating to me because I've had so many conversations over the past few months, people telling me, but all the Chinese growth data is disappointing and the stock market's going up every day. I'm like, yeah, if you're a company in China, the fact that you're not adding excess capacity on top of excess capacity, you might have a hope of increasing your margins or even having a margin, is good news for stocks. And so here we are in China today, where most foreign investors are looking at the economic data coming out, saying, "Ooh, that's not good. I'm not going to invest in China," and they're missing out on an absolutely roaring bull market.